We're going to show Priceline weekly chart, and we're going to show how overextended and what the trading range is and what a bull it's been. Oh boy, bulls get overbought. On this weekly chart here now in the video, you can clearly see MMTs of where the lower wick on that support level was at the higher end of the weekly breakout bar. And we can clearly see that the earnings took this name higher to such overbought levels of 93.67%. We have reached a calendar high, and not only that, if I was back here in those days in 1999, so I'll show you what it was like back then. I'll go over here to the trend tool. We'll start with the trend tool here. I've got some chart patterns that I'll show to you back in that time frame. Remember that it doesn't matter how long it's been around. This is what the stock was doing in 1999 and 2000 up here. And you can clearly see that when you start getting into these patterns over here is you start taking a look at where Priceline is right now. When you take a look at the Priceline trade at $660, you've clearly taken out a lot of these peaks. And you start getting over here into this area right here where this lower trend line is. This was 1999 when Priceline was doing its thing. I remember the dot bomb days like it was yesterday, and what great golden years they were shorting these names down. Here is a area of 680 up above there. There's another area right in here of around, let's just call it, this trend line right here is at 668.29 area back over here. And I want MMTs to know that we're overbought, but we could break higher. Here's what I will tell you is that we have a range on a weekly level that we can deal with. The trading range itself is going to be from the bull side of the calendar 2012 area is only this focus of this previous weekly earnings bar that Priceline went through and how we hit that support level and how we can start getting down into other support levels. We're going to look at taking that high end of that short side. You can see the wick right here. That's the high where we were shorting it last week. Let's go into the info tool. But why would you want to take a bull house, a bull power? Because we're overbought up here, and that's one level of 655.09, and you can see right here it dropped back down to the midpoint of around, so it went from 655 down to the 647 area, right across here because it did. And on the invert side of that wick, as you can see, that the lows were put in at 628.20 last week. So you went from the lows of 328.20 and you shot right up there to 655 from its pullback. That's how Priceline has acted in price action behavior. We'll continue to short those intraday highs at resistance. Then we're going to move over here to the $640 call that was on Priceline, March, monthly, expires a week, next Friday. It's a monthly, not a weekly. And it got inflated. And so the calls had pulled back. Now, when we look at Priceline on the put side of the market, right here on the monthly level, we can see right here from trading these things is that they've been marked down to levels where these are deflated versus the 640 call. And this is getting deflated. So let's take a look at our strategy and our option pit. And that is How do I buy that bid? Wholesale at that $7 area, went up to 970, opened at 720, went to 970, 690 is that low. We'll be looking at trading that 650 put. Not only that, it's deflated against the calls over here. Here's what a 650 call looks like. And a 650 call on Priceline monthly got up to $12 and dropped down here to $7. That was too overbought. You can see what happens from 4 to 12, and then that's the 650 call that expires on the monthly. Now, when you take a look at the 660 put, you can take a look at where the high of this last peak was a month ago. They were trading at $33 on the high on 3/6 of 2012. I'm sorry, this is a daily. It's 4 days ago. Correct me, MMT. And basically on the daily here, you were 33.27. They got down here. They cut them in half down to our wholesale bid. That's at 1230 once again. And our option pricing authority, market maker skills, is that you go from the open of 1290 to the daily high 1610, and the daily low now was 1230. But guess what the close was? 1610. We're going to be watching that if you go up here on the weekly level, which was 655, and we get a daily reversal going out of the next weekly level, we're going to look at making these transactions once again at the SMF price, not the public price. Okay? And how do I understand that the 650 call was a great buy? Yeah, over here. Yeah, over here on February 9th, you could have got these for $1.25. But nonetheless, they did peak out at 1290 right there on this cycle, and they peaked out here at 1250, and Friday they hit 1140, and the low was 690. They closed at $7.10. You have to understand, when the call side's up here, it has to come down. Then you have to understand that the put side that's deflated mathematically goes up in value. Trade management, it's all based on the fact that the bull trend on Priceline needs to be executed. We're going to be looking at positions that even go out further. I'm going to show you what the daily looks like as far as coming off of this weekly chart, and I'll throw in a daily Priceline right here very quickly so that you can see it and why you're going to make money on it, and what a daily reversal looks like, what the public looks at, okay? And why is it that you can see right here on this daily level, on the daily level. Now watch this, trend tool. Let's get right back over here to where these lows were. This was at 628 area. Let's get right back up here on that daily high area. This is where the daily reversal comes in. It's got support at the 10-day moving average. Where is it? 634.90. So it's about $10 below here. We can come down here. We can also come right down here slightly above the 20-day moving average, which is at 609. I'm showing the daily chart reversal and what next week would bring at that high top overbought area. And can you go higher? Sure, you can go higher. The higher you go, the more money we make. The daily level is at about, it was 92.79, now it's at 91.83. That's percent DS, that's overbought levels. The weekly level is at 93.67. So we're overbought in the time level of the price exhaustion, and it's possible that we could break higher, but each break higher, we go and change the strike price, and we get it where it hits that major wall of resistance like it did here. And you can see the daily reversal up here, 655 down here to 647. That's that daily resistance reversal. How to trade Priceline. There was a 650 call. That's very overvalued. The higher that they go, the bigger that they fall. The charts that we want to include is the 650 call. Once again, I just got to tell you that we would look at getting long down here at around $2.70 during the monthly expiration. Should Priceline reverse on its weekly, and should Priceline reverse on its daily chart, or whatever strike prices that we get, is that Priceline is overbought. So be aware. Sell it on the high end and buy it back on the lower end. So short on the high, buy on the low. That is the put to call strategy. Right here, Mr. Goalie, you can take a snapshot picture of it. This is the Priceline strike prices. You got the 317 monthly here. You got the 421. And you've got from 630 to 660 there. And you got from 630, you got calls and put strategies all the way up to that put of that 660, which is slightly in the money. And you can see that the put actually ended up on our trade Friday, and the ones that you traded on the weekly expiration did extremely well at the 650 put. Okay, and the calls here went down in value here. This is that call that lost its value right here. So you can see where the put side was getting its gains. How to trade Priceline, how to use calls, how to use puts, how to understand weekly topping patterns.